that's really the value that we're pitching to people is, hey, our real value here is in that we're helping accelerate the process. The other big thing that we're doing too is not only we're helping them understand what all the pieces are that the bank is looking at and helping them position their business to be most easily qualified, but we're also doing a lot of the legwork of making sure they get paired with a suitable bank, because that's one of the biggest, frankly, the biggest headache that I see, most people having to overcome is, hey, I don't know what bank we should be going to.
The following is brought to you by Thryv, the end-to-end client experience platform that helps you get the job, manage the job, and get credit.
Hey, this is Gordon Henry at Winning on Main Street, and this week you get to meet Josh Kim. If you want to buy a business, Josh is your guy. If you want to finance an existing business, Josh is your guy. Josh is an expert at helping you get SBA funding, that's Small Business Administration funding, even if you don't think you qualify. Josh will tell you how to buy a business with an SBA loan, the myths and the facts. Josh is the founder of Accelerator, where they consult and educate business owners on finding capital through the SBA, the Small Business Administration. Many business owners don't even know where to start for getting an SBA loan for their business. Josh and his team provide education, resources, and concierge-style assistance to help you. So get ready. Welcome, Josh.
Hey, how are you guys today?
Hey, good to have you here. So Josh, let's dive in. What is Accelerator?
Yeah, so 7A Accelerator, it's a financial consulting business where we specialize in helping business owners who are wanting to find financing through SBA lenders. There's a lot of misconceptions, as you kind of touched on, about where to get financing, how the process really works, what you have to have ready. And so we do a lot of the work with answering those questions, as well as helping business owners find the right lenders to work with, because finding the right lender to work with is a lot of times 95% of the battle.
Got it. And just for people who may not be very familiar, just explain, what is the SBA and what are SBA loans?
Yeah, so the SBA, it stands for the Small Business Administration, and they were started back in the, I want to say, what was it, the late 40s, early 50s, as a response to, just general economic conditions. The government formed it, and their goal was to help to put a government agency together that would run certain programs that would make it easier for small businesses to access capital and opportunities. And one of the main things that they did was put together what is called the 7A and the 504 loan program. The way those work is that, you're not actually getting a loan from the SBA. That's one of the biggest myths that I like to clear up for people. You're not actually getting a loan from them. You're getting a loan from a bank that participates in the SBA program. So the way that works is you'll be getting a loan, and the SBA acts basically as the insurance company on that, and they're insuring through our government guarantee 75% of that loan. So that's a little bit about the SBA and how they work. The main two programs are the 504 and the 7A. Like I mentioned, 504 is purely for real estate. It's used in much more limited situations, and then the other portion of that is with the SBA 7A loan, and the 7A loan can be used for pretty much anything, like you mentioned, buying a business, expansion capital, partner buyout, buying a building, whatever the case might be.
So are certain businesses right or wrong for SBA loans? Somebody's listening to this may be thinking, well, that's not right for me because I don't have the right type of business. How does that work?
Yeah. So, that's one of the main questions I get is my business eligible? And, just the general rule of thumb is if your business operates for profit and is incorporated in the United States, you are going to most likely be eligible for SBA financing. Those are kind of the two main, things that are you got to check the boxes on. Is your business incorporated in the United States, and is it for profit? If you answered yes to those things, you're most likely going to be eligible. The SBA does have a narrow window of disqualifiers, so like a cannabis dispensary, a strip club, certain vice industries, a payday loan operation. Those are businesses that are not going to be considered eligible for SBA financing. But what I tell people, 99.9% of for-profit businesses in the U.S. will qualify. E-commerce, doctors' offices, veterinary clinics, self-storage, RV parks. The list goes on.
Yep. Great. Okay. So what do you charge? What fee do you charge for this service? People may be thinking, yeah, this sounds great. It's probably an expensive service.
Not really. I mean, we kind of have like 2 or 3 buckets, and it really depends on the size of the deal and kind of what's going on. But our fee rarely exceeds 1.5% of the total loan amount, and it's actually capped at a certain dollar amount as set by the SBA. So, I would encourage anyone who's wanting SBA financing, don't let the concept of paying for a consultant to help you scare you away. Because at the end of the day, if you're paying us, let's say $6,000 to help you get a $500,000 loan, the economic benefit to your business with having that $500,000 and turning it over is going to be significantly higher, than any fee that would be getting paid to us. So.
Yep. And obviously going to save the applicant a lot of time and frustration, I would imagine.
Correct. And that's really the value that we're pitching to people is, hey, our real value here is in that we're helping accelerate the process. That's why I've called the consultancy what it is. We're helping accelerate the process. And the other big thing that we're doing too is not only we're helping them understand what all the pieces are that the bank is looking at and helping them position their business to be most easily qualified, but we're also doing a lot of the legwork of making sure they get paired with a suitable bank, because that's one of the biggest, frankly, the biggest headache that I see, most people having to overcome is, hey, I don't know what bank we should be going to. I don't know where, I don't know which bank we should be talking to, because a lot of banks out there give customers just lip service of, oh yeah, we can do this, but when it gets down to it, when rubber hits the road, a lot of banks are going to fail to be able to perform, for what a business owner might need in, getting financing. So
sure,
that's really truly the biggest benefit we provide to people is saving them that time.
You may have said it before, but just so people are clear, what amounts of money are available from the SBA? How big can a loan be?
So through the 504 program, you can get up to a little bit over $10 million. For the 7A program, the dollar amount is $5 million. So you can borrow up to $5 million through the through the 504 program.
And how much interest and what repayment terms are recipients typically looking at?
Yeah, so if it's a non-real estate loan for a 7A loan, you'd be looking at a repayment term of somewhere usually at a minimum 10 years. So if it's just a working capital loan or a partner buyout loan, you'd be looking at 10 years. If you are doing a business, if you're doing a business acquisition that comes with real estate where you're just financing a building purchase with it, you get out to 25 years. And sometimes the loan amount will fall somewhere between 10 and 25, but 10 and 25 are the most common lengths of time that you'd be running into for an SBA loan.
And you're paying it back with interest. So these days, if you take out a home loan, interest rates, maybe they've gone up a little bit, or probably in the neighborhood of 3%, I would guess. What are the interest rates you're paying?
The interest rates on an SBA 7A loan, you'd be looking at, right now it's actually capped at 6%. So you're not going to actually have a rate that's higher than that, than 6%. 504 loans, in the neighborhood of 3.5%, give or take. They're a little bit cheaper, but again, those are real estate only. If you're getting a real estate loan with an SBA 7A loan, you might be looking at 4.8% to 5%, give or take. But they're also giving you capital for your business, and that it's not purely just a real estate loan. It's a little bit pricier than just residential mortgages.
Got it. Okay, and you said you help the small business owner find a bank. Do you actually provide the introduction to the bank, or do you just say, hey, speak to bank ABC?
Yeah, no, we have relationships with banks across the country that specialize in the SBA 7A product. And so a lot of what we're doing on a regular basis is working with business owners, helping them by introducing them to the banks, highlighting, hey, this is a loan request that is coming from the borrower. This is roughly what they need. And then from there, the business owner, will work with the bank. So, and frankly, there's 1,300 plus banks in the country that are considered preferred lenders with the SBA 7A and 504 programs. But, when you look at lending volume, it's disproportionately weighted towards a handful of banks that do a very good job. And I say handful, more like 40 to 50. And so it's important to know what the credit appetites are of each bank. And that's a lot of the value that we're delivering is, hey, you're looking for financing to buy a trucking business. Okay, we're not going to go to this bank, because they don't like trucking businesses. We're going to go to ones that do like trucking businesses. And, without the inside knowledge and expertise that we have, that really wouldn't be a resource available to the business owner, because, only we really have that. I don't say only we have that insight, but that is a specific piece of insight that we are bringing to the table that is of value. Is, hey, we know which banks are going to do what kinds of deals, so let's save you some time, going through this process by making sure you're not wasting time with, a bank who's not going to be able to, pull through for you.
Right. And again, you may have touched on it before, but I want to be clear for folks. What purposes can the money be used for? Can I use it to hire a few new employees? Can I use it to buy advertising? Yep. What can I use it or not use it for?
Yeah, so you can use it for a business acquisition. You can use it for a real estate acquisition, a partner buyout. You can refinance and consolidate more expensive debt. You can use it for hiring new employees. That's a very common, it's a very common use of funds that I see. People going out, hey, I need to go hire more employees, and they'll leverage the capital for that, or just general working capital. Hey, holiday season is coming up. I need more capital just to be able to have more inventory on hand so that we can accommodate, the increase in demand for whatever our goods or services might be. Very, very common thing we're hearing right now.
Okay, great. Hey, we're going to take a quick 30-second break right now. We're going to hear a word from our sponsor, Thryv, and we'll be right back.
This episode of Winning on Main Street is brought to you by Thryv, the end-to-end client experience platform that includes everything small business owners need to meet their customers' expectations. Thryv's award-winning and fully mobile interface delivers technology previously reserved for big business to the fingertips of small business owners nationwide. Thryv's built specifically for small business, but there's nothing small about what it can do. Thryv handles your entire customer experience, helping business owners reach more customers, stay organized, get paid faster, and generate online reviews, all from a single device or screen. To learn more about Thryv, visit winningonmainstreet.com and click on Get a Demo. When it comes to software to run your business, there's no comparison. Check out Thryv today.
Okay, we're back with Josh Kim of 7 Accelerator. This is a very interesting discussion. Josh, I wanted to ask you, you said you found money through this process and you liked it so much you went ahead and became a consultant in this area. What got you interested in this in the beginning of like, hey, I could borrow money through an SBA insured program and use it to buy businesses? What got you started thinking about that?
Well, I was more interested in just the general aspect of business acquisitions, leveraging outside capital to, buy an existing operation. I was interested in that first, and then, basically came on SBA by necessity because there's really not many other programs out there that, are going to allow you to do that. Banks have credit boxes and credit criteria. Like, they wouldn't approve these deals conventionally, and the only reason that they approve them through the SBA program is because you have a 75% government guarantee, right? If you have a guarantee of 75% on a loan, your downside risk is mostly mitigated. And so I kind of came on it by necessity, and through my business acquisition process, I learned that not all banks are offering it in the same capacity, right? They say they are, and it's the same government program, but the way that they operate is very different. So anyway, I learned a lot about the process just from firsthand experience, and it was kind of through, it was around the time that COVID was going that I realized, like, hey, there's a lot of people who just don't have the right, they don't have the right knowledge about how to get financing for their business. And I saw it because business owners were having a hard time accessing some of the, the government relief programs that, were entirely guaranteed. And it's like, if you can't access financing that is 100% guaranteed by the government, heaven forbid you need actual at-risk capital, because you're probably going to be clueless on where to do that. So what I found is a lot of business owners are really good at their business. They know how to run it. They know how to operate it, whatever goods or services they provide. But when it comes to raising capital, it's a bit of an unknown area. They know just enough about it to get by, and they don't necessarily care to delve much further, because a lot of times there's not much of a need until there is a need. And then, and then what do you do? Right.
Right. So that actually leads me to the a related question, which was like, I always hear in the small business space that it's really hard to get money, that small businesses always seem to be unlucky or unable to access sources of capital. And so that is a reason for why they can't, succeed, either buy a business or expand. So my question to you is, outside of the SBA and what we've been discussing for the past 10, 20 minutes, is it hard for small businesses to access capital in other ways, or are there other sources of financing that a small business should be thinking about?
Yeah, there's definitely other options. I mean, merchant cash advance, other short-term online loans from, online vendors. But when you look at like the comparative rate and term and what you can do with it, those other options are much more limited. You're going to be looking at like a 6 to 24 month payback period at 25% interest with practically speaking a ceiling of like only $100,000 or something. So when you look at what options exist there compared to, hey, I need financing to go buy a business, I need $1 million for something, the conversation is very different. And that's kind of really what I see the main benefit is with the 7A program, is just it's that much bigger. You can get so much more done with it. And frankly, that's why the government came up with the program, is because they recognized there was a gap. Because if left to their own, if left to their own resources, banks would just go for bigger clients. They wouldn't really care to help small businesses. So they'd come up with a program that would additionally incentivize banks to lend to small businesses, because those are the ones that really truly drive the economy.
Right. Well, it's awesome to know about, and that you provide this service and make it easy for people. So most importantly, anybody listening who's interested in getting in touch with you, how do people get in touch with you? What's the best way for them to find you and start working with you?
Yeah, so I'd say best way to get in touch if you wanted to reach me is just through the website, 7accelerator.com. If you're interested in getting financing for your business, you can always just schedule a call. I've got a team of folks that are very ready, willing, and able to take calls, do a quick eval with you on whether or not your business might be a fit for SBA financing. And once we have a quick deep dive call, we can say, we think it'd be a good fit, and we can kind of get started working with you, helping you pull your finances together, find the right bank for you, consult, and help you navigate the process. And we'd go from there.
Okay. And by the way, does the fee come out of the loan? So if I somehow don't get a loan, do I still pay the fee?
No. Our fee is tied to the success of getting a deal done. So
okay. So no risk really for the person who's applying.
Correct.
Okay, that's very important. People may be, thinking, I don't want to be out a couple of grand if this doesn't work out. And you're saying that won't happen. Only if you get the loan do you get your fee.
Yeah, I mean, typically how we work is, we'll take a percentage of, we'll take a portion of our fee up front as a retainer, but it's refundable. And
okay,
so the balance will be due after the loan is approved.
Okay, well, this has been great, Josh. I really appreciate you stopping by, and I think this is a fantastic service for small business and would-be small businesses to check out. So I hope people will really check out your site, 7accelerator.com, and book a call with you, and hopefully get started. Thanks for your time.
Yeah, awesome. Okay, good talking with you, man, and we'll be in touch.
Okay, and for you out there listening to this or watching us on video, please, if you enjoyed this podcast, please tell a friend or colleague to subscribe. Please leave us a 5-star review. We'd really appreciate it. Until next time, make it a great week.